Yeah, it's just another example of how brilliant of an investor SBF was. I don't know what else to tell you. He really saw this far ahead into the future. Welcome, everyone. Welcome back to In the Charts with Chris, Breck, and I. And this week we have a special one for you. Robinhood announced a bunch of really cool things at ETC and Cannes, and we decided that we would do a Robinhood special. So all three charts today actually come from the Robinhood report. So without further ado, I will turn it to Chris to show us his chart by first pointing out that Robinhood is not quite a crypto business yet because they only make $1.5 million a year per employee. So it hasn't quite reached the threshold of something like Tether. So Chris, let's do it.
Tether is the bar for all companies. And
It
we were
should be.
just talking offline that this is a missed opportunity because we should have all come dressed in a white suit, like like Vlad did for Ken. I wanted to kick us off. So this is from the Q1 2025 investor presentation. You can all go find this on Robinhood's website. It's public data. And specifically, what this chart shows is cohorts over time and the cumulative net deposits of each funded customer across time. So in the x-axis, you have basically the life of the cohort. So, this is when the cohort first joins Robinhood. This is 16 quarters in. And this is the amount of cumulative net deposits per funded customer. And uh, the yellower lines are earlier cohorts. It looks like maybe 2020 or so. And then the darker lines represent more recent cohorts, including Q1 of 2025. And the thing that's really striking here is that, this is actually the cohort lines that you really want to see as an investor in any business, which is that number one, the cohorts actually start out larger over time on a per customer basis. So, the average funded account in 2020 was, I don't know, maybe $1,000. And then now in 2025, it looks like it's almost $7,000. Not only that, you can see that these earlier cohorts do grow over time. So maybe they started out at $1,000 and, over the course of 16 quarters, they'll get to $4,000. And the slope of the line is, like this. But then for some of the recent cohorts, what you see is that actually the slope of the line is much steeper, which means that the actual amount of deposits are growing faster than the earlier cohorts. So not only are customers putting in more money up front, but they're also putting in more money over time at a faster rate than earlier cohorts. And I think this is really interesting because I think it's actually the kind of dream scenario for many fintech products that want to be the primary account, the financial account for a given user. And what it means is that you start with one product and then you can build on it over time. The two kind of follow-on charts that I'll show you that support this are number one. This is the actual platform assets broken down by the type of asset. So Robinhood, we all know for its actual equity investment and trading, which is this dark green over here. They also have options and features, and then crypto, which is the bright green line or the bright green bar. They've also got actual cash that people hold on their platform now. And then they've also started to get into retirement. And so what you can see is that not only are the assets themselves growing, but they're adding additional products on top for each customer that allows them to grow the amount of assets that they hold on Robinhood. And then the last chart I'll show you is actually this one, which, you'll see here that the total amount of platform assets basically tripled from Q1 2023 to Q1 2025. But in that same time period, the number of funded customers actually only grew by about 10%. So this is the power of, I think, being a primary account for a fintech business. And I think Robinhood is really showing that and able to throw its weight around. So I'll pause here. I'm really curious to get your guys' reaction. What an awesome, cool business.
Yeah, it's really cool that it's growing a lot. Can you go back to the cohort analysis?
Yeah, this one.
There's the first one, yeah. So there's something here. There's the discontinuity in terms of obviously the 2025 and the rest of the years, and something that may be, well, I would love to see this alongside the P&L, of course, which we've sort of looked, but not like side-by-side comparison, because I do know that they started a 2% match on, I think, his 401ks rollover, unlimited. And so that would just, as a go-to-market, obviously you're giving people 2% of all of their PA, and that would likely increase artificially, at least temporarily while they were running this campaign, the initial deposits and also the funded customer net deposits over time. Even though you obviously like would see more of an effect on the initial deposit. So I wonder if it's kind of like a temporary thing, or if they've been running similar campaigns, or if it really is sustainable and maybe sustainable, and it's just a better go-to-market, and the customer acquisition cost is extremely high, but the LTV is so high too that this actually matches for them. But it does, I think, matches. It was the beginning of 2025, which is when a lot of the spikes actually start.
Yeah, for me, when I look at this cohort graph, I interpret this as Robinhood moving on from being primarily a uh, almost like new retail zero fee, zero commission equity trading app to a advanced trading product. I can remember in 2018 when I first downloaded Robinhood, it was to like buy $100 of, Tesla stock or something, or like Google stock. And now the things that you can do on Robinhood as an advanced trader are just like honestly kind of crazy. leverage, zero dated options, crypto. Like it does seem like the product has geared towards a completely different user than their initial wedge, and I think that that is illustrative in the data. The other way that I could also look at it is, looking at uh, Parker from Rippling's idea of a compound startup. Like in fintech, Robinhood definitely is that. And when you build the initial relationship in equities trading and then offer just like an RIA, like you offer like everything on the risk curve for the customer, it definitely compounds. And I think it would be really cool if they also had a way to delineate like what basket of deposits these assets are in, right? So for someone who deposited 6K in quarter zero and then upped it to 10K in quarter two, like, is that because of the RIA or sorry, yeah, the retirement account, or is that because people are making money in crypto, or is it because zero dated options launched in Q1? Like there's so much happening in Robinhood right now, that it would be really cool to see a little bit more attribution on the cohort analysis chart. But I agree with you, Chris. Like there's a lot of really good stuff happening at Robinhood today. And it's awesome that they show us this level of depth on the product side and on like the net asset side, because a lot of companies just show you a P&L. They don't actually give you this much depth.
Yeah. It doesn't tell you everything, but you can see here, Diego, to kind of what you were mentioning. This is the actual retirement assets. So you can see that this bar starts in Q1 of 2025. So I think you're right on that. And yeah, we should probably look at the P&L to see if these are like what the marketing costs are there. And I'm sure they've done the math and the payback and everything. And then Breck, to your point, we don't have the breakdown by asset, but you can see that the average total platform assets per funded customer has grown, more than double over the last 2 years. And I think actually what's interesting is that because Robinhood started out as an equities platform and equity prices generally have appreciated from 2023 till Q1 of 2025, even if there were literally zero net new customers and zero additional capital put in by those people, literally just holding the same stock would have, yielded some amount of appreciation. So I think it's funny because we oftentimes look at crypto exchanges and we think about it as a feast or famine business. When there's a bull market, then these companies are doing so well, and they're growing over 100% year over year at over $1 billion of revenue scale, and you think that's amazing. But actually, you know, similar dynamics are at play, not just in crypto as well. I think it's generally true in the investing business. Although, of course, crypto has generally way more volatility than equities.
Yeah, whenever I see, so this strategy in general can be described as the everything in the kitchen sink for financial services. It's literally that. I mean, let's be frank, right? Uber for ATM withdrawals is extremely gimmicky. This was not what they announced this time around, is what they announced the last time around. It's extremely gimmicky and, awkward. And like, I doubt anybody is ever going to use this thing. Maybe I'm extremely wrong, but that doesn't seem like a real use case. It just feels like a gimmicky thing. They're kind of like, but to the message of like everything in the kitchen sink, this fully replaces the bank is where they're going at. And in that sense, I totally understand it. What I remember from Square Cash was that every feature that you launched increased attach rate for all these other features. And so there is this compounding effect of every feature that you add actually does activation, has better activation, creates more of a compounding experience because customers do end up using more of the product. And so that's actually like maybe gimmicky, maybe not, but everything in the kitchen sink ends up actually like having compounding value for everything else, including the core business.
One of the lessons to learn here is actually that, we've seen a number of neo banks or fintech companies in the last couple of months built on top of stablecoins. And one of the things that we've debated a lot internally is the infrastructure has gotten so good to be able to create a stablecoin based neobank. And you can use a lot of what we've called borrowed parts internally, right? So you can use a wallet provider, you can, use APIs, you can use orchestration layers that are all fully built out. And it almost feels like you can cobble together a neobank pretty easily now. And we've always asked ourselves, where's the defensibility or where's the moat? Because if it takes you, 5 weeks now to go and build a stablecoin based neobank. And, if they issue self-custodied wallets, then, you also don't even need the licenses really. And so it becomes so easy. And where does the defensibility come from? It's actually really interesting to look at Robinhood, because Robinhood in some ways is also borrowed parts, right? Like they don't own a bank. They have banking partners for the cash component. And then obviously for crypto, for a long time, they didn't custody their own crypto either, right? And then I've recently seen on the app, they're offering mortgages now. And so they really are trying to be like the full one-stop shop, but it's not like they're issuing the mortgages themselves, they're doing it through a partner. And so it's really interesting that actually they're using this playbook and executing it really, really well. And maybe there is defensibility and scale and aggregation effects, and the application layer, if you get the distribution right, is a really valuable place to be. Okay, I'm gonna stop sharing. I'm gonna give some of you
Yeah, Breck,
guys
what
the
did you bring us? What
opportunity to
chart
share.
spoke to you?
Let me turn it over to my screen. Where is this guy? Okay, so also a Robinhood chart. This one shows Robinhood's transaction-based revenues quarter over quarter. And in the green, we've got equity transaction-based revenues, so trading revenues. You've got options trading revenues, and then you've got crypto trading revenues. And then a smaller slice for other, which I presume is probably, some other catch-all basket. The thing that stands out here clearly is that Robinhood's actually a crypto company. Like something happened in Q4 2024, and we went from $61 million in Q3 revenue to $358 million in Q4 revenue. And Robinhood is where like their largest core trading revenue comes from crypto. And Chris, I know it might be too late to pull up the last chart, but if you looked at the net asset value on platform, I think Equities is something in the like almost $150 billion, and crypto is only like $20 to $25 billion. So
Yeah,
they're
so
making
equities was roughly 57% of total net deposits. Crypto was 12.5%.
and clearly they're making a lot more money on the crypto than they are on the equity. So that's like kind of the first thing that I think stands out to me. But then, if you look back to the announcement last week, Vlad was harping on the fact that they were now going to bring, what do they call it, stock tokens to their European customers. So they're actually going to try, and despite the fact that equity is a low margin business for them, they're actually using crypto to bring equities to a new market that they don't currently support. So right now, if you're a European user of Robinhood, you can only buy and sell crypto. You can't do any of the options products, and you can't do any of the stock products. But they're going to try and use crypto as a way to do a little bit of a runaround with some of the licensing regimes, and create a global market that runs 5 days a week, I think, not 7 days a week originally. And I thought that was really interesting. Crypto obviously is a natural fit for bringing markets to the world. I think we're seeing like effectively the stablecoin playbook where dollars to the world. We talked about this a little bit in our like American Dynamism podcast. But clearly like Robinhood's actually just running that same playbook, but for other stuff that they offer in the US. And I found that to be interesting and a little bit of a paradox. Like, maybe in Europe, it's a less competitive market and they can actually derive significant fees by bringing their stock products to Europe versus, hyper competitive market in the US. And so it begged the question, like, A, why are they doing this? That's the only reason why I could imagine it. And two, like, is crypto now just going to be a tool for the incumbents to be able to expand globally? And are we entering a phase where it's no longer a disruptive technology, but it's actually a technology that advantages the folks that have distribution? So I kind of wanted to open up the floor, see what you guys thought, and we can take it from there.
Yeah, I mean, on that last one, savings in dollars are much lower than general equities that people have on their portfolios. And so if you believe that one of the real use cases for stablecoins and the number two use case is holding dollars from countries that don't have easy access to dollars, the next step is, as we've described in the past, you have to believe that they're also going to want to own Tesla and SpaceX because they're going to want to do investments. Now, of course, that client base has a lot less marginal dollar to invest in the market. So the sizes of their PAs are going to be small, but it's going to be growing, and they do want access. And so that to me feels like an obvious next step. And let's be very clear, what Robinhood is doing is playing with this arbitrage of the self-custody arbitrage of allowing anybody in the world to have the self-custody wallet that has a token, and being pretty aggressive from a regulatory perspective in the US. And they do have broker-dealer, they had introduced a broker-dealer. I think they went all the way to having a carrying broker-dealer and being able to do their own clearing from Robinhood clearing. So they do have the stack to sort of like play in this game in a credible way in the United States. And they're playing in Europe, which further, muddies the waters of like, it is a European customer. It is not an American customer. And so they also are running that gray area to see if this picks up and this becomes big enough. Because Americans have easy access through Robinhood to equities, and Europeans, people make a point of like, why can't they just open an account at Fidelity? Fidelity allows European customers to open up, but they don't realize the amount of KYC and the burden on both Fidelity and the customer itself and how poor the experiences are. If they already have a wallet, this experience is going to be 10 times better.
I think that's right. And I also, one thing that we talked about with dollar as being a global savings product for people that, live in countries with volatile currencies. One of the potential risks is, maybe the local government there doesn't feel comfortable with you holding on to dollars, and, they really care about their local currency. And we haven't really hit boiling point on that yet, because I don't think stablecoins are right now being used for local commerce. So it's not like somebody, in Nigeria is going to go into, local store and try to buy something using stablecoins. I don't think that's happening just yet. But at some point, you could see there will be a fracturing of different countries that will take varying positions on this, right? So some will say it's fine. Some will say it's not fine, and you can hold stables, but you need to use local currency to transact. Others will just outright say, like, I don't want stable coins in my country. So I think it will be a fracturing of outcomes there. But what's interesting is, will that also occur to different assets? Because what you could see is like, well, the dollar is also depreciating in value. And so once you get exposed to a digital dollar, I think it's a pretty natural leap to go and say, well, instead of actually going and buying dollars, like, why don't I use those dollars to go buy treasuries, and at least I can hedge against inflation of the US dollar. And then maybe I'll hop on the risk curve one more time and actually just go long the US economy in general. And I don't have to pick a stock, but maybe I'll just buy like an S&P 500 index. And that's, hedging against not only the inflationary effects of potentially deflating away the dollar, but also I get some amount of a bet on the US economy. And so you could see that naturally start to happen. And, we haven't quite seen the backlash against stablecoins from a variety of governments yet, but that seems like one of the unknowns probably to come to a head in the next 5 years or so.
Yeah, I want to watch this green bar here. And basically is like, my question is, does crypto actually enable Robinhood to expand its equities business? Because it allows to go to like less competitive markets and sell the same product that they have in the US. And in a market that they have to do zero, commission trading, can they actually do commission trading in the rest of the world? And can they expand their business because of crypto rails? And, I think that will be a leading indicator into kind of what you could call it as a second order effect of, geopolitically, do people want free trading of the American market and Europe and Africa and Asia? And like, are there second order kind of like effects there? Who knows? But I have to imagine if the first thing that will tell us is if that thing doubles to 100 mil in Q3 or something like that, we'll start to see the effects of this.
Yeah, it's just another example of how brilliant of an investor SBF was. I don't know what else to tell you. He really saw this far ahead into the future. Okay, so with that, I also brought you a chart from the SIM report. I want to talk about two things. I want to talk about this chart, and I actually want to talk about the Arbitrum-based layer one that they actually announced also in Kent, which we should really talk about. Essentially, what this is, real quick, is the total securities lending revenue that increased by 69% year over year to $71 million. And this is securities lending, for those of you that are in crypto, roughly is staking for equity. Maybe this is the easiest description for people. And the way that you stake equities is you allow them to be lent out to folks that want to short it. Basically, people want to borrow it because they want to sell it, and they want to short it, and they want to take a position against it. And so you have it in your portfolio, you are long, you're not going to sell it for N years, and so you give it out. So you generate some extra yield. There are some equities that generate basically no sec lending because there's a lot of supply, and there's lots of them that have a lot less supply, for which there's actually like meaningful amounts of money that can be mined. So one thing to note here is this is almost $300 million a year, right? So this thing is growing fast. So this alone justifies, $3 to $5 billion of market cap valuation, which is pretty interesting business on its own. And for me, the interesting thing here is that there's lots of crypto businesses kind of like going after this now, especially as you think about on-chain IPOs, in business models around on-chain IPOs of how you can actually reduce DATS fees, how can you reduce the issuance fees, and how to go to market in alternative business models. This one is a really good one that obviously all traditional primes use and make a lot of money of, but that could actually be a sustainable way of having some of these new business models that are kind of like free, like Robinhood has sort of done the free trading, that can justify or that can allow the business to exist in a way that is sustainable. So I thought this one was pretty interesting. But let's move to talk about Arbitrum. It feels like they launched an Arbitrum-based chain immediately, Vlad said, to begin with. And so it feels like, number one, the question is, maybe we should talk about the chain itself, but maybe we start with the easy thing, which is there value for Arbitrum in this at the end of the day? The fact that people launch the chain on you and then sort of move away shortly after if it's successful. So you kind of like, you probably like do a partnership, arguably, I don't know what the deal is, but in many of these cases, they give out tokens, they give out favorable economics, they give something, and then a year later or whatever, when these things are successful, it feels like the worst of all the worlds.
Yeah, my take is twofold, I guess. I think there was a lot of debate on Twitter of like, oh, Solana versus Arbitrum, like how they win the deal. Honestly, I think for Robinhood, it doesn't matter to them. Like it probably actually does not matter to them if they were to use Solana or Arbitrum, and we should be pretty sober about that. Robinhood is bringing their distribution to whatever chain. It's not vice versa. And I think of this as like a technology play, or maybe some sort of go-to-market. Say like, there's I don't know if there's too many defining characteristics outside of what works best for Robinhood. I think if I'm on the Robinhood side, it makes a ton of sense to actually do your own chain, right? So right now they're using crypto effectively to amplify the Bitstamp acquisition, to be able to expand into other markets and use the like 24/7 accessible globally, anyone on the internet, and some like licensing arbitrage. And then they're not plugging into the programmability aspect of it. And that's the reason why you do your own chain, is make it fully programmable and under the like umbrella of Robinhood. So I view this way more as a like strategic win for Robinhood, their prospective future, than I do like whichever chain that they use. Obviously, there should be some level of lock-in. Like, I actually don't know how easy it would be if they start issuing a bunch of assets on chain and like provisioning wallets, how easy it is from a product point of view to like rip and replace. So I do think this is a win for Arbitrum, but fundamentally, I don't think the decision like was really that hard. It was probably just like, let's go work with some partners, see who is the most favorable for us, and just like, work with them.
So wait, it's a win. I think we can all agree that it's a win, even if it's just atmospherically, but is there value capture over the long term?
For
In a
Arbitrum.
year, does anybody care for Arbitrum, that this was launched on Arbitrum, if it ends up moving away? Which, it is an if. This is a sequence of nested ifs, right? There's a probability that maybe it's just good enough and then they just stick around. But again, as they hedged, it doesn't sound like they would, because they don't care about what the underlying mechanism is.
And to answer the question directly, I think it's like more of a perception win. Like a lot of people early on the base were like, we want to use Base because we're going to get Coinbase users over time. Right now, if you go deploy an Arbitrum, you're going to get access to some Robinhood users on over some time period. And I think that creates an accelerant for the Arbitrum ecosystem. So I think in the short term, it's 100% a win. Who knows if it actually leads to like, increased rev and increased transactions and like hard characteristics like directly, but I think indirectly it's definitely a win for the Arbitrum ecosystem.
Yeah, I was thinking a lot about Base as well. As I was hearing Vlad's presentation, because obviously the company that's done this before, and really the only company that's done this is Coinbase, right? Actually, I should say Kraken now
And
with Ink
Crack.
as well. Yeah.
Yeah.
But
I think
those two
it's called Ink, actually.
It's
not
called
Crack.
Ink.
Yeah.
We wish it was called Crack, but it's called Ink.
They do have something called crack, so they did it. They went there.
But at least Coinbase and Kraken are, they grew up as crypto companies. They grew up as crypto exchanges. Robinhood, to Breck's point, today makes so much of their money on crypto, so maybe you can call them a crypto company now, loosely, but really their origins and the genesis was in equities. And so I think it's a moment because we finally have a company that didn't grow up from being a crypto company, actually launched their own chain, and that's new. I also think from a product perspective, the idea that you would get a lot of Coinbase users through Base, I think we were all thinking about that high level when Coinbase first launched Base. But did that really make a lot of sense? I don't know from a product perspective, because look, like Coinbase operates an exchange and they're not going to put the order book on, like, what does that mean, right? Like, you're going to get access to Coinbase users from a product perspective versus for Robinhood. Yes, they have trading, but also they're actually going to offer a lot of assets that may be minted on chain, right? And that gives them some benefits in terms of availability, global access, settlement, those types of things. And so I'm really curious how deep Robinhood decides to go in terms of product investment into their actual chain. And I think it could look actually very, very different than anything we've seen in the past.
I wouldn't be surprised if it looks kind of like everything by default is actually on platform and not on chain. Like it is on, and there's a delineation. And if you want to opt in to some pro features like 24/7 trading, new asset types, then it has to go into this like sandbox environment where it's actually on chain from regulatory perspective, and then also from like a technological point of view. And basically that chart that we were looking at, Chris, that showed all the different AUM on platform, we just start to see a lot more diversity. We see different types of assets show up there that didn't exist. So rather than being like, when we went from like equity to options, now we'll see equity, options, crypto, real estate, bond, like we'll just see a lot more stuff there. That would be my bet as to how it plays in.
Makes sense. It felt like, for Robinhood to complete the arc and fulfill its destiny, they need to launch Hood token and airdrop it to everybody in the classic sense of Robinhood. It was meant to
that would
be.
be such a big step for a public traded company
It's fate.
to actually launch a token in this way. And Base doesn't have a token for a good reason. But you're right, that would be tremendous for crypto. That would actually be truly incorporating the spirit of crypto and like really taking it to all the way up to 11. By the way,
first,
before we
Robinhood
go,
token.
Robinhood Hood. We already have our next lined up, which I'm not going to disclose on air who's going to be, but our next guest charty that we're going to have on the show. Yes, we call each other charties. I think that's the official name.
That's news to me.
Yeah, it's news to everyone except that I just made it up. So that's it. That's our episode. Thanks, guys. See you next week.
Awesome.